Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Monday. And we're at the last trading day of February, thank God. What a month. And it is about 7:15 p.m. Central Time on this 31st of January, 2022. So we had a short covering rally today, a rather powerful one that didn't let go all day. It drove the shorts out of the marketplace. You're getting what's called a contra-seasonal rally in the stock indices. You're trying to hang in the gold market, something in the neighborhood of the 1800 level. The dollar got beaten back as most currencies during the day were up, but now they're giving some of that up as the evening's going on. We're still seeing good bids in all the energy markets, and grains are a little bit higher to start the evening off. Now, when we look at gold, the one evident thing is you've been going sideways most of the time on a closing basis against the 18-week moving average of closes. You can deny that all you want, but that's pretty much what the market is doing. You get spurts to the upside that don't hold, then you get attempts at a break, and they generally don't hold either. I wouldn't count this market to go one way or the other at this time. Are we trending? No. In the simplest of patterns, you have a higher high and a lower low is measured by the swing line. Now remember, what the swing line does is it takes a look at the current price and it looks to see the bar to the left of it, and should the line go to the upside or the downside. There's 5 rules that make it up. I teach it in my charting course. It's an indicator, you put it on, and what you're looking for are patterns you can trade against. Not seeing it right there. What else do I see? We had a market that sliced and slid right on through the 100, the 200, and the 18-day moving average of closes. On the way up, those should be the resistance points. So the first stopping spot, let's call it bus stop number 1, the 100-day average. Bus stop number 2, the 200, and bus stop number 3, the 18. Does it have to get to them? No, but it's logical that it does it. And part of the reason why is you've taken these black Bollinger Bands and all you've done is widen them out. You've dispersed them this way. Well, the wider they get, they don't have a lot of meaning. So you've gone from the upper Bollinger Band, you see that right there, to the lower band in all of 72 hours or so, and that was one heck of a move from 1857 to the 1775 level, and you've exhausted the market for a little bit. In the process, those that were bullish got stopped out. Now the question is, has there been a bear signal yet? And I'm not saying it. I'm seeing no signal in the market, and when I look at momentum, I have an oversold market. So I have a market that just broke its uptrend, fell down to support areas made up of the 100-day average, the lower Bollinger Band, oversold condition with a downside bias. The gold-silver ratio is doing a lot of nothing. The market tries to stay under where it builds some bullish character. Anytime you're under this number, it's bullish. Why? See these side numbers? That's the amount of silver you'd have to take in a perfect world into your shopping mall. You've got your coin dealer there going, hi, how are you? You bring in, he's such a good guy. He's not charging you a commission. He'll say, okay, I want you to give me 78.41 ounces, a piece of 8, bite off the silver, whatever it is, and you're going to give him that to get an ounce of gold. So the lower it goes, the less silver you have to give him for that ounce of gold. When you look at the silver market, it is still in the bear camp. All that really happened here is the 18-day went up to the 100-day average in green, skimmed it. And then the market got under everything. So that's going to be the resistance point on the way back up. That's what I would think. Does the market have enough ammunition here to get down there? I don't know. What it did do is it ran out of its steam to the upside between the upper Bollinger Band and this line, which is the 200-day average, and it's been the resistance points on the market. Now, if you really want to get a bull market in silver going, you got to get over that number and stay over it a little bit. Then you're going to hear people saying, well, we're going back to the old hunt days of $50 silver. That's what will happen if that happens. In the copper market, I think every day last week, I warned you. I said, you don't want to be playing this copper right now if you're bullish, because the Chinese holiday begins on the 31st, which is today, the Golden Week with the Lunar New Year. Why would you want to do that? The traders walk away from their trade desk, and I'm talking the people that buy copper to use in the factories and the like. Speculators, they go away. It's family time. And they make a big deal out of it in China. The country basically shuts down for a week. Now, that doesn't mean all the different services are shut down, but with the Omicron going, it's pretty dead. And that's what you're dealing with. Now we're going to get the Olympics coming. You can imagine that. And there's already, I think today they said there were 30 some odd cases already of early people that have been coming in. So not a very good thing. Can you imagine the money they're losing? I'm sure they were counting years ago. This would be a boon for their economy. I feel bad for them because it isn't. And, I hope the TV rights help them with their dollars, and let's hope it's very good and we get great TV coverage. I'd watch it on TV anyway, so to me, it doesn't really matter that way, but I do feel for the athletes. I'm sure they wanted people there. In any case, down here, on the way up now, the resistance 100 and back up here. In order to get out of the downtrend, you got to get back right over that high that you just made, and that high was 453.45. But I think first what happens is the pros will be looking to see what this market's made of down there if it doesn't stay oversold. Oversold, I would assume the professional traders write something into their programs that's a filter, and it says, okay, yeah, we got these downtrends, but either it embeds or if it gets to a certain number, no, it's too oversold. You don't attract new money getting into that. Take a look at the platinum. You tell me what you would think. Now, look at these moving averages. You've hit the Bollinger Band. If you back away, as momentum is turning down, where might you go? A logical spot. Are we trending? We are not. You got a higher high, lower low. I teach not to go short over Bollinger Bands, over the 18-day average, only to buy over it and to sell under it. And basically, that keeps me in what I call a filter of trying to be with the trend. When the market's over the 18-day average, I have a bullish bias. Why wouldn't you? Under it, I have a bearish bias. So I use it as a filter to try to figure out what type of trades. There's nothing wrong with coming out of an existing trade up there, but to pick a top, well, why didn't you pick it here? Then it just keeps going higher and higher. I've seen that all the time. No. Now, you're pulling back to the 100-day and the palladium, but this has been the strongest of the markets. Russia has a lot to say. They do some mining, as I understand it, in palladium, and the market's been up there. With the carb business, what do you think they're using in catalytic converters? And the more I keep reading this, the chip shortage, it's serious and it's going to last this year, but chips are becoming available. And as those chips become available, you're going to have, for every time you get a chip into a car and the car gets all the chips it needs, you got to put a catalytic converter on it unless it's battery operated. And how many battery operated cars are out there today? Is it 8%, 9%, something like that of the total cars made? It's not a big number. Last, the dollar index. As we got up, and I said this to you, as it was rallying, I said, watch out. First time you get to the upper Bollinger Band, I teach in my course. It's an 8-video course. You're going to complete it in an hour. You're going to get a master's degree in understanding Bollinger Bands in a way you've never thought about them. But I'd be looking right there. You own it. I don't want to own it. And boom-o, away you go. Uptrend. Gave you the money, and away you go on that. And that's what we try to do. I talk Bollinger Bands, and in the firm, I get calls all the time. People want to ask me, and I'm talking to brokers, what do we do with this, Ira? What do we do with that? But I do it with you just as well. And it's not the only tool. I'm looking at the charts, the moving averages. But we put together so much information that it's a wealth of knowledge for you in what the spreads are doing, what they're saying, option strategies, who's doing what in them. Then we get to the futures and then the fundamentals. Like right now we have major storms coming into the United States. They're talking a foot of snow in the Chicago area coming into tomorrow night through Thursday. So we're going to get hit one more time, and it's been brutal, and it's going to get cold. We're going to 48 degrees tomorrow, and then we're going to plunge. How do you get all this information? It's simple. We email and we put it in our charting software. So if you'd like to see it and see what our customers get from us, this might be something you want to look at. Just go to our website, far left, free offers, sign up, we'll get it to you. I'm Ira. You have a good day.